Thursday, April 18th, market analysis, Stan Ehrlich. And we start out with the stock indexes and go to futures and sometimes cyclical analysis or sectors, forex, crypto, variety of things. But usually the indexes and futures at a minimum were oversold on every single index I watch, which is the spider and its siblings, so to speak, the Dow Jones and its siblings, and the NASDAQ and its futures relatively connected, NASDAQ futures contracts, etc. So the E-mini, lately the most popular, is oversold for the last 2 days plus today. I think we're going to see it come down a little more before it bounces, but it could bounce at any time because of the oversold condition. Right now, we're basically unchanged. We haven't seen a lower low yet, although yesterday we did relative to the previous day, and then again, 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 and then again. Finally, the last rally of any significance, we've been down to new lows every single day for what is that, 7 days in a row, trading days. Oversold, close to support, starting at 50.22.5. But that doesn't mean it's going to bounce off of that. It means it's a little bit likely to bounce off of it because of the combination of support and oversold condition. We'll see. I think we're going to get there in the next day or two, or at least next week. I'm not sure that we're going to see a bounce in the meantime. You know, these oversold conditions can go away when you go flat and not necessarily rally, although a rally is typical. Next chart is going to be the same E-mini on a short-term 1-minute basis. And you can see that yesterday afternoon when it reopened a tiny bit higher, slowly rallying up to a little resistance and then came right back down to test almost a new low for the trend and bouncing a little at the moment. By the way, yesterday on my YouTube, and I want to drag this over to right about somewhere. I think it was, well, actually, I'm going to skip it. Nah, I'll just skip it. It came right up to my resistance level I talked about, which is right there. That's right. And dropped off. But it made a new high after that. Nevertheless, it came all the way back down. And here we are, going no place fast, no significant reversals of any kind. Next. And that's basically what I've got to say about the other indexes with the typical individual nuances and specifics. So the spider, SPY, new lows almost every day. Remember, it only trades for 6.5 hours a day, where the E-mini trades for 23 hours a day, a lot longer, 3 times basically longer. As a result, the high lows are a bit different and sometimes significantly. So the spider is an inside doji today so far. Oversold, yes. Bounce, maybe. And a little bit of support, trying to close an old gap, actually. Not quite doing the job completely at the moment. But hey, we'll see. It could make a new low. I think it's quite plausible. And today, tomorrow, Monday, without any significant rally in the interim. Next chart, we're looking at the spider 1 minute. A little delay here, but slipping off. Looking for, you know, maybe a bounce. QQQ. We've got the downside objective still in sight, not down to it yet. And that objective off of this fairly flat, not easy to see, rolling type of a head and shoulder top. Now, the high day is the high day, and that's always the top of a head and shoulder top. Otherwise, you can call it a double or triple top or some other formation. But the symmetry of this pattern is one of the key features. If you go exactly, and I think it was 9 days to the left, you've got a rally high. You go 9 days to the right and you almost have a rally high, but it does stick out somewhat as being interesting. More so, you go another 1, 2, 3, 4, 5 days to the right, and you do have your last high before this break. And on the left side, you've got the same number of days to the left to an obvious last shoulder high. And then another 5 days before that, you've got the last rally before things start to flatten out. Now, if you draw the neckline on the pattern, I've got that in a yellow dotted line. It worked off of the lowest low before the head of the formation, and the lowest low usually, obviously, after, or just before, I should say, the last rally high to make the last shoulder. But this happened all in one day. So you kind of have to look at a short-term chart, intraday chart, to see which, what happened first. But nevertheless, you draw a line off of this low, and it didn't get broken until kaboom, it dropped off sharply. And that's a classic downside breakout, and that was on April 15th. Lower low the next day, small trading range, but no upside. Way lower low yesterday again. And today we're finally getting oversold officially in the Qs. So maybe a little bit more before a bounce. Now, my real downside objective in a month, let's say a month, is 412.68, down to maybe 395. So that's a goodly sized range. And I'm basically pegging this on the last half of December, first half of January trading range that was prevalent in all of the indexes. And basically the best support area we've got, and in the ballpark of Fibonacci retracements. Next chart, Qs. 1 minute, new lows for the last couple hours, coming down closer and closer to the low of the day. Down just a little bit, not a lot, but still, it's not a big up day either. Next, NASDAQ, down a little on the daily data chart and also oversold. Looking at the 1 minute chart on the NASDAQ, NQ, June futures, we seem to be on the way down to make a potential new low. Wouldn't be surprised. Next chart is going to go into the YM. This is the Dow futures. And it has also gotten oversold today for the first time. And we did get a ER sell signal on the exact top of the market, the highest day, and that was on April 1. This strategy, ER signals, is written to try to peg major and minor market turning points to the exact day. And the DIA, this futures contract for the Dow, the YM, did have a signal smack dab on top. That's what I love. Next chart is the bond futures. Now here, I'm trying to justify it holding the bottom of the channel, but for a couple of days it dropped below the bottom of the channel and dropped below the support area. Normally that would be continuing to be bearish, but with the oversold condition and being oversold a few times in the last week or so, I'm thinking that we're still going to bounce out of this and start to rally some. Right now, we're near the low of the day and just a hair below the bottom of the channel and the support area. So I'm kind of thinking it's going to pop back up and start a little bit of a rally short term. I don't think we're seeing any kind of a significant low. I think it's too soon. I think it's going to be another month. Next, 10-year notes, same comment. I wouldn't be surprised, except for the double top formation. There's your double top up here. And the downside objective is measured from the lowest low between the two highs. That is your depth of the formation downside objective measuring stick, as they call it. And a week ago, we met that objective. And now we're going further south. I don't think by a lot, and I don't think for a real long time. Again, about a month. Excuse me. And then I think we're going to start another longer term substantial bull market on interest rate futures. Crude oil, heating oil, unleaded, RBOB, gasoline, New York gasoline. We've reached our downside objective now on the crude oil with this small 1 week double top. It's come and gone basically in 2 days. Yesterday, big downside breakout, closing near its lows. The downside objective was 81.50-ish, and we got there, plus a little bit more today and bouncing right back out of it so far. Not oversold, but came fairly close. Trend really does not seem to have changed here. I still basically think this could be a continuing bull market, as much as I don't want to have to say that. Nobody likes to pay more for their gas. We'll see what happens. I think it could drop off a little bit more, but I'm not convinced it's turned into a bear trend. Next, natural gas. Well, the trend is obviously still down. Over weeks and months, we've seen just nothing but lesser, lower highs and lower lows, including new lows for the whole chart here for months back, just 2 days ago. And we're bouncing out of close to oversold conditions, not quite. So when we're oversold, we turn yellow. And when we're overbought, we also turn yellow. So that yellow is a warning, right? Traffic light. So it means that you may be turning around either up or down very soon. Didn't turn yellow, didn't get overbought in the last couple of days. So I don't have that criteria having been met. Don't think this is going to go very far. Minor resistance, just a little bit higher. I think it's going to make new lows very soon. Heating oil, support, and oversold for the first time today. So the concept here is it's going to bounce. We're oversold in a support area. I know we made new lows since early February, but the day isn't over. And we're right now right at previous lows. A little bit of a rally or more would be making new lows, but not closing below the previous lows, which is friendly. If we stay below where we are right now, especially below the green zone or yellow zone right here, this support area, then I'm going to claim we're going to drop off a lot more fairly quickly to 2.4 area. Next chart. Oh my God, gold just keeps getting overbought again and again and again and won't quit. It's not topping out yet, but I do have to reiterate, as I have, this blow off top type of extreme rally with a bad close on that day may have been the beginning of a move down, but it just isn't doing it yet. I need to close below my little blue, little yellow line here, the support line. And once that happens, then I should be on the way down. Meanwhile, I'm waiting. Basically the same commentary for silver, which did break the little yellow support line, but also has not gotten in a new high ground. And so it is almost exactly the same situation as in the gold market. I think it's topping out. Platinum did break its support below several days worth of overbought condition, and that was yesterday in particular. And now we see it dropping off a little bit more earlier. Right now, it's just about unchanged, up a tick. And I'm looking for lower levels, probably down to test this support area. Yep, probably so. Down around 900 to 880. Next chart, we got the copper. Well, the head and shoulder bottom worked, past tense. A couple of days ago, we got up to the minimum upside objective in a major resistance area in overbought conditions. And I kind of thought that that was going to be it. But today we jumped through that resistance level, I should say recent highs, and test the top almost exactly of the resistance area that I blocked off quite a long time ago. And right now we're still up there, close to the highs. So I'm looking for this market to turn down at any point. Hasn't done it yet. Can't get short yet. No signals yet. It's just an expectation. So we'll see what happens. Next, daily chart on the soybeans, soybean oil, meal, corn, and wheat. Well, as I've been mentioning, I've been trying to justify some longer-term bullish formation in the grains. They're there, but holding on by a shoestring. This could turn into a double bottom. It has not yet. It is oversold. It could rally at any time. Then we are closer and closer and closer to a more obvious possible double bottom, but it hasn't happened yet. Don't jump the gun. Don't go buying it just because it might develop. Wait a little bit, not too long. As it starts to act good, just as long as your risk isn't too exposed, too large, and you've waited too long, and you've got plenty of upside potential. Now, soybean oil, meal, oil, sorry, that's right, could be a double bottom. It's right there almost exactly at the previous lows that we had back in February 23. It could be a tiny bit lower, tiny bit higher. That would still be an okay double bottom. There's no rule that I know of that how close does it have to be to the previous low, for example. Just as long as it's pretty darn close. Again, up for interpretation. This is interesting. If we have just a little bit of a rally today above the high of yesterday, we will turn green and get a buy signal similar to what developed back on April Fool's, March 1st. So I'm thinking, yeah, it's possible. It's a little, maybe very, very tiny bit too early, but we're low and last, and it's not turning around yet. Meal, double bottom did develop, started to rally pretty good. No particular buy signal on the second low, which was April 3rd. But the bottom of the market, we got to the exact day on February 29th. So far, this possible double bottom, or maybe it's a head and shoulder, because you could have, this could be a shoulder. That's the head with our buy signal smack on the bottom, which happens. And it's great when that happens. And the last shoulder could be this, but it's awfully low. And if you call it a double bottom, the bullish engulfing we're missing, and the upside objective based on the head and shoulder or the double bottom are both about the same anyway. So all I have to do now is start to make new highs above, I'm going to say, to be on the safe side, 347.50. I think probably as they start to rally above 345, it's going to do it anyway, another couple of dollars, the same day or the next day. But it remains to be seen. It's a doji today, and it's going no place fast. Next, slipping slowly, corn attacking a little bit of support from a couple of weeks ago. Bear market persisting. Boy, was that a great head and shoulder top back there. What was that? April of 22. Super. But don't see anything great about a major bottom yet in corn or wheat. And both corn and wheat, we bought the low, we got a buy signal, I should say, on the exact low day of the move so far. Love what I see here. Except it's just rallied a little. Bear market still continuing, slipping slowly, new low again today. I think it's going to make another new low, like corn, meal, oil, beans, cattle. Rallying a little more today, at the moment down slightly, but we do have a minor higher high. I really can't come to a great conclusion at the moment as to whether this is a longer term bull or bear trend. You don't have a higher high in the last big up move. So far, you don't have a lower low on the big last down move. That's kind of how large pennants form. This is so damn big, I'm doubting it's going to be a pennant. I just don't have a real good idea at the moment on cattle. Let's go to Miss Piggy, hogs, top day, bearish engulfing, the very high. perfect, bullseye, down a little bit today, almost another new low for the trend down. I'm looking for at least to move down to 98.50 and probably all the way down to 92, maybe 89. And we are 102.15 at the moment. Next, OJ and the other ICE contracts, I have to use TradeStation, which is fine. I used it for probably 30 years. But we have a little problem at the moment with Ninja and the data feed having been outrageously price raised by the ICE exchange in New York. Now, still got the feed from TradeStation. The test of the previous downward slanting channel is pretty much good enough for that low today. This trend does not necessarily seem to have changed. I think the next move, now that we're nowhere near overbought anymore, is going to be back up again, I'm sorry to say, to new lows for unleaded gas, New York Harbor, RBOB. Next, we are very, 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 very overbought until the break starting today. Coffee. If we get below yesterday's low, we will have a gigantic red bar, an ER sell signal officially, and I'd love to see that, but I gotta wait until it gets below yesterday's low in order to get that signal and for the colors to change. Meanwhile, I wait, but I think we're about to be turning down or just started this morning. The opening a new high ground for the whole bull market, and then a current quote way down here makes it look like the market is trying to turn. Next, big pennant formation still an OJ, not going anywhere fast. I'm waiting. And cocoa, testing the top of this possible, it's still possibly a broadening top formation. And there you have it outlined. But I can't go up anymore if this formation is going to stay a possible broadening top. You've got to go down. It usually doesn't go sideways. And any more of a rally closing above today's high, for example, would start to kill the formation. And that just gets more bullish quicker. And sugar. Broke support a couple of days ago, but in very oversold conditions. As I pointed out yesterday, it was down a little bit below 10, which is very low. So we're rallying a little bit today. Unfortunately, it didn't get below yesterday's low. And if that had happened, then I'd have a bullish engulfing green buy signal. But it doesn't always happen like that. We had a couple of buy signals way back here at the bottom of that break that worked out spectacularly well over a couple of months. And these signals also provide short-term buy and sell signals, scalps as well. Next, new lows for a long, long time in cotton. Let's squeeze this a little bit and see how long we're going to go back here. This is the May cotton contract specifically, and we almost made a lower low way back relative to June of 2023. So it's been close to a year. And at that time, we got a buy signal almost on the exact low day. We got a buy signal on the exact low day on November 10th, last fall. We have everything we need except lacking the bullish engulfing, which can come anytime now. And we'll have another fantastic buy signal. Price range around the same. Timing looks interesting. Oversold condition is severe. Got all the makings from it, and they can happen very, very fast. RBOB, talked about it already. You guys have a great weekend. Thank you very much.